And your speaker. There we go.
How's it going, everybody?
Perfect. Awesome. Can hear you well.
Who bought the dip?
Again,
This is
All
wild.
right. Avi, have you done a space before?
No, this is wild. I'm excited though.
Yeah, it's pretty
This will be
great.
cool.
Yeah. So the first thing I'll just ask you, especially for my speakers who haven't used the spaces before, let's get your audiences in here. So what I'm going to ask everyone to do, and any of my listeners, if you enjoy this content, if you think people would enjoy it, if you go to spaces and you go to the little share icon in the bottom right of spaces, it allows you to share via tweet. So if you share via tweet, you can just say, come join myself and others, and then share that out, and that'll give a link that'll show up on people's timelines, and that makes it a lot easier for people to join this call. And we'll probably end up with about 300 people, I think, on this, and that'll be really fun just to speak. I know that some of my speakers have some specific stocks that they would love to talk about. All right, and so that is sent out. Once that's sent out, I'd love to get to 100 listeners on here, and we can just get started. All right, just popped over 100. Okay. All right, Anthony, Bobby, new to my spaces, but not new to spaces necessarily. And then Brad and Gannon, two regulars. I'm going to have Brad back on Monday night as well. We're going to be doing a cannabis theme space, but I'd love to just kick things off and get right into it. I want to bring value to all of our listeners. So, Anthony, I know that you have a couple things maybe you wanted to touch on, a specific stock, and also just maybe some more about the market in general. So I'm going to ask my speakers, let's do roughly 5 to 7 minute intervals. So there's plenty of time for everyone to speak, and we'll move through. And yeah, the floor is yours.
awesome. I guess I'm going first then. Cool. So I guess what I wanted to start off with talking about here is that I know obviously the markets for the last almost months at this point, 2 months, have been more so focused on this value-oriented companies. The ones with the good revenues, good multiples and margins and everything. And if people are just slamming into these value names, and that's what they are really thinking is going to be happening for the next couple of years. These rates, the interest rates went up higher on the 10-year and everything, and people got very, very scared. But what I will say is that there's some really interesting news that hit the markets in the last few days, and I think it had a lot to do with this SEC statement on fully paid lending that I posted about on my Twitter. But I'm happy to read it out here. The commission staff issued a no action letter regarding the broker dealer customer protection rule in relation to certain fully paid lending programs operated by some dealers. And basically, they're entering in agreements with the customers who lend to broker dealers fully paid or excess margin securities, and to provide these securities lenders with collateral that fully secures the loans. So a lot of the a lot of the leverage has been pretty much on the short interests in a lot of these names. And I think that having to have that higher collateralized value in those will allow for less insane leverage that has these insane moves on the stocks, both up and down, a little bit more in the future. So I think that's kind of why you started seeing a lot of the SPAC names and a lot of the smaller growth names have a nice recovery into this, which was for the 22nd. So I just wanted to start off by pointing that out. And I think that's the main thing I was looking at to see when the timing of when this was all going to turn. I knew it was a lot of it. For instance, CCIV has about 20s, I think 23% short interest, and IPOE is up there as well, 19%. So a lot of these names that a lot of people find quality, even if they're going to be producing like CMLF will be trading at 10 times sales next year, or I think it's 10 times sales this year and like 7 next year, quite low. But just getting wrapped up into that, newer company, smaller market cap, I think it was this kind of took the foot off the gas of these shorts a little bit. So it allows for these names to breathe. And that's kind of why I'm reinstating my, I guess, bullishness on these smaller companies and these growth names just in general off that. Because at some point it becomes so overshorted and overcrowded to one side, right? Like we saw that there was, and so I'm using the SPACs as a proxy for all these growth names because it does just trickle up, right? Like those are the most risky in a lot of people's perspectives. And then it goes all the way up to the Amazons and the Apples at the top. And in between are the Rokus and the TTDs and the Shopifys and all this. But knowing that the premiums on SPACs, which should always not be crazy, they went to 27%. And then they got shorted back down to about 1% premium over net asset value for pre definitive agreement SPACs. So I think that was pretty much the floor, right? Because under that, you can redeem up into the merger. So it's like there's not as much money to be made on that downside move. And so I guess I just wanted to point that out. I think that's something important that like Twitter wants to or should think about is how much more bullets in the cannon do they have in the short side to take down a lot of these names when the interest is getting high, both percent wise, the borrower rates are getting higher, and that SEC fully paid lending statement. So I just wanted to touch on that first, and I might have gone already a little bit of my segment. So I want to see if Avi has anything to say here, just to hop on.
I'm on mute here. You guys hear me now?
Yep.
Okay. What do I have to say? I don't know if there's any specific questions. I'm happy to chat if there's anything specific questions.
Yeah, I can.
If there's.
Yeah, I can definitely throw out.
If there's a specific stock or anything that you. Yeah. Sure.
Yeah. So I guess based on just what were you looking at this week? Did you buy or sell anything? How do you feel about the markets right now? What is on your radar for this coming week?
Yeah, so I guess I could talk about skills because I've been a big bull of skills since the Feek days. That was a SPAC, right? And so, that one obviously has been on a complete roller coaster. People, a lot of haters on Twitter, and then people love skills, and then there's haters again. So it's always a funny one to watch. And I think one thing that I just want to pound the tables. That was a fun way to bring in our podcast. But I think the idea here with skills is that it is a platform. And I think a lot of people are misconstruing this as potentially a gaming company. People say they have shit games. And I really just want to continue to reiterate that this is a platform and they are going to bring on a hit game eventually. And when that does happen, it's a completely different stock at that point. And I think what they've been doing right now, there was a few things that happened where they ran up and then they reissued a ton of different shares, right? And so then it dropped and it got kicked to the curb. And then these last 2 days, it's been popping back up again, right? And so it's really deciding where to go. I am still looking at this as a 2 to 3 year type of a stock right now. Again, it's just continuing to go back to the platform. They signed those deals with the NFL. They're going into India. It's an unfortunate thing right now, of course, but you see, India is really locking down again, right? And so when people are stuck in their homes, they could have a big growth right there in India. And the one thing that's very cool, I'd say, about skills is that they don't, because it's they're launching a lot of these new games. And what Andrew Paradise, as their CEO, had mentioned, he was saying that they do not calculate any revenue from these new games because they don't know what it's going to look like, right? So they're not pre-predicting any of those games. So any game that they are going to create, in the next month or so that are not on the previous earnings, those will pop up as unexpected, revenue. So that's super exciting to me is that, until that changes, they're going to continue to go on and on where they may beat revenues every single, they're not going to beat it every single time. But of course, what's cool about that is you're going to see a lot of surprises potentially if there is big games that do pop up. So I think I'll pause there if anyone else wants to add to that or switch up.
Yeah, no, absolutely. I think that skills has been.
Yeah, one more thing too is
back to you, Anthony. Go for it.
Sorry, yeah, I didn't. It's the lag on here. I was just gonna say also in terms of the India expansion there, that's not factored in as well. So who knows what that will be? Especially like you were saying, Avi, the fact that India is so rampant right now with COVID and lockdowns again. If they are able to secure some good games in India that are going to be producing a lot of people playing on the platform and start making it sticky over there, I think because that's not factored into revenues at all, I think it could be a very different conversation in the next 12 months.
Yeah, absolutely. I think with skills is something that's been a very highly debated topic. On Twitter, I've seen threads with very bullish opinions, very bearish opinions. I posted about it several times myself. We saw the dip all the way down to around 1253 this week, and then it peaked today, back up to 1863. So it could be an interesting coming to this next week. I think that, I talked a little bit about this on a space earlier this week on Wednesday about how clearly there's been some shorting action on skills, and it's a interesting time period for it to be shorted right between the Q4 and Q1 earnings, minimal catalysts. And a lot of these people are starting to cover their positions is what I believe is causing this pump back up. Real quick, before we go further into this space, I just want to let everyone know, as always, I sometimes have technical difficulties on my space. If this space does crash, we're blessed that Gannon also has the ability to hold spaces, and we'll just go to his space. I finally have an official meeting with Twitter on next Thursday, to talk about that. So hopefully I'll get some feedback. Also, I have a pinned tweet up top. All my speakers have actually seen the demo of the back of the Wolf app, which is great. Been bringing some more people onto it. We increased our user base by 10% today onto the Wolf app, which was incredible. How many people downloaded and joined. So if you want to be part of the pack, working with so many different creators on this and trying to bring their visions to life with some place that we can have FinTwit, but really built for stocks. So you can check that out on my pinned tweet. You can see a little demo that I did of our analysis. But not spending too much time on that. I want to move on real quick. So Gannon, I'm throwing it over to you to just chat with us about what you've been eyeing this week, maybe any positions you added to, bought or sold. Give us the details.
Yeah, thank you, Wolf, for holding this. As always, your spaces are absolutely incredible.
I see he's off mute, but I can't hear him.
At the end of
Can you guys
last
hear him?
week, I kind of.
Brad,
Can you hear me?
I can hear him.
Okay, you can hear Gannon? That's weird. I cannot
Can
hear
you guys
Gannon.
hear me?
Gotta love Twitter Spaces, folks. All right, well, everybody else can hear Gannon, so I can't hear Gannon, so we'll just have to see what happens. Oh, wait, I just heard Gannon. Gannon, talk again?
Okay.
All
Sorry
right.
about that.
I got you back.
You guys can hear me? Yes,
yeah, let's
no?
hop right into it. Go for it.
Okay. Let me know, I guess, if you can't hear me. I just want to say, Wolf, thank you again for holding this. These spaces are always awesome. Super stoked that we have some great names in here. Kind of the end of last week was a big buying, day for me. I hopped in Coin, TSM, bought a little bit more of NVIDIA, hopped into ASML for the first time, and then got some SC for my Roth. So I'm kind of, even more bullish, I guess, on the semiconductor industry. Something that I kind of just wrote about was how ASML just had their earnings and it went very well this quarter. For those that don't know what ASML is, they're a chip manufacturing company that basically has, in my opinion, a large monopoly on this specific type of chip making process. It's a EUV. Again, I mean, I'm just seeing even his name at the top here. Christopher Seifel is more of the expert on this than I am. He actually was the one who brought me on to looking into this company. This company's been around since 1984. It's from the Netherlands, and they do this photolithography system in which there's a light source that is used to expose circuit patterns from a photomask onto a semiconductor wafer. Their biggest clients are like Intel, Samsung, and TSMC. So this type of process with their EUV lithography tools are one of a kind. No one in the world can do what they do, especially at the scale that they do it. And they just had their earnings. They've been up, I believe, 6 or 7% this week. They smashed earnings. Their earnings were equivalent of $3.87 a share on sales and $5.26 billion in revenue. Just a year ago, during the same quarter, ASML earned equivalent of $1.02 a share on sales and $2.6 billion. So we saw a growth of over 100% in Q1 revenue year over year. This kind of just is cementing in my mind, obviously not just this company. I bought into TSM last week and a little bit more NVIDIA, that I just want to own more in this space with what's going on in the semiconductor world. And I find that I started, with AMD, worked over to NVIDIA, and now I'm moving more up the food chain per se, in which I feel like the best strategy in my mind is to find out, what companies are really making these things and have more of a hold on, controlling companies below them, if that makes any sense. So there's that. And then just recently today, I think it was today or yesterday. Yeah, it was today. This morning, I bought some Bitcoin and Ethereum because I just that dip was a little too tasty for me to pass up.
Yeah, I've been buying more myself as well. I did a podcast earlier this week with David Zaylor. If anyone hasn't followed him, at David G. Zaylor. And that man knows Bitcoin and every single crypto just inside and out, just absolutely insane. So that's on my Spotify. It's called the Market Madness Podcast. But real quick, Gannon, I'm going to come back to you, but I see that I'm really grateful that we have a special guest that joined us that's not been on one of my spaces before. So Pierce is the GM at TradingView. TradingView, they have just some insane software. They do financial tools, charting. I've used their premium services, and I really, really enjoy them. And I think that they have a fantastic team as well. So Pierce, it's awesome having you on here. And I'd love to hear from you if you want to talk about maybe some stocks you've been looking at this week and what's been on your mind.
What's up, guys? Thanks for having me. Let me know if my mic breaks up. Glad to be joining. I guess a little late to the party on the Spaces chat, but it's better late than never. Any bull market might as well join the pack at some point in time. So broadly speaking, we at TradingView don't try to pick stocks too much. I mean, on a personal level, I'm definitely pretty long semiconductors and lithium, but in terms of specifics, we work a lot in the kind of brokerage space, so I know a ton about various kind of trading firms, trading partners, trading technology. So that's kind of where I spend most of my time in terms of investing, whether it's through an angel investment or through more public markets investments. I mean, I'm glad to be here. I mean, I definitely can talk shop on any sectors you guys are looking at, and dig into some of the data that we have on TradingView, maybe give you guys some insights in terms of what's trending on TradingView. We obviously have now 30 million people using the product every month. And sorry, if you're living in New York, there's going to be some sirens going by at different parts of time of the day. So if you guys want to dig into specific companies, I can pull up kind of their analytics to just see how highly trafficked these companies are, which is usually a good indication of interest level, which is always fun. But yeah, no, it's great to be part of the chat. For context, I've been at TradingView for about three or so years, and as the GM, I'm basically like the glorified janitor on the team, digging all the terrible stuff out of the gutters and doing all the grunt work that ultimately nobody else has time to do, and so it falls to me and the team, and we take care of stuff, and then I work on the product side as well. So in terms of product recs, just for everybody in the chat, feel free to either send me a DM or send TradingView a DM. We listen to product feedback like it's our job, because it is our job. And so you'd be surprised how many people actually write us on Twitter, and their ideas actually get put into the product stack and eventually into production in some cases. So always keep that in mind. And if you see things that might be compelling for us as a company, we're more than happy to hear you out. We have more than 300 people working on the technology side of things now, just to give you a sense of how big TradingView is, and another 50 or so on the business and operations side of things. But almost the entire company is tech, and we're scaled kind of around the world. So we have offices I sit here in New York, but we have offices in London, Japan, Australia, South Africa, Brazil, France, and I don't know, another dozen or so countries. So anyways, thanks for having me, guys. And it's awesome actually to connect with some folks that I've obviously followed on Twitter for a long time, and then realize, wow, these guys are real. They're not like just catfish that have been trolling Twitter for years.
Absolutely. It is such a pleasure to be able to hear from people. And I think that there's so much more that comes over in the vocal, where you can hear the emotion and understand really what they're getting at. And thank you for giving us a little bit more on the TradingView platform. everybody should go check out TradingView. I believe you can do a trial for the premium for free. So you can check that out and just experiment with some of those tools. And also, thank you to TradingView for being a sponsor of the Market Madness tournament, which we've been running, and the finale is on Monday. So that's been amazing too. So Pierce, I'm going to come back to you, but maybe take a look at some of the data. Two of the main sectors that I've been looking at. So on Monday, I'm going to be doing a space covering the cannabis sector with Brad and then a few other people. And then we're also, this past week, we did the gaming sector. So I'm going to come back to you because I'm going to go to Brad now because he hasn't had a chance to speak yet. But maybe if you could take a look at some of those data when I come back to you, that would be a perfect thing to talk about. So real quick, just moving over to Brad. Brad, I know that you had a couple of stocks that you wanted to talk about. I know you wanted to hit on Nanox and maybe some of your ads this week. So please, listen.
Yeah, so for 5 to 7 minutes.
Yeah, if you need 10,
2%.
we're friends.
Okay. Yeah, I will take you up on that. Most speculative holding, 2% of investable capital is my max. Ton left for the company to prove. There's short reports out there that I think anyone should read before they dive into the company. And I'm a cheerleader, so just keep that in mind as I say a lot of exciting things about it. So starting with the value prop of Nanox. So the core of what Nanox is a digital X-ray tube that costs $100 at scale versus $150,000 for a legacy X-ray tube. And the exciting thing about this X-ray tube is it uses cold cathode technology to greatly reduce heat and extend the lifetime of the tubes. They're 70 to 90% smaller than a legacy tube, which reduces weight and allows Nanox to plug 11 sources into one machine, which gives it the substitute, but some functions. And I probably should say, I think Anthony and Avi are both bulls as well. They actually were before me on this one, so good to have some other bulls in the chat. But so a quick note on buzzwords. So MA is brightness of the X-ray, and KVP is speed of electron emission. Both are positively correlated with radiation. And great, and if not, that's negative as well. But some sources for the Nanox source are X-ray, fluoroscopy, angiography, mammography, veterinary medicine, security, and manufacturing, which they're working on with their partner and investor SK Telecom. So how does it work? So the Nanox tube replaces thermionic filament, which is needed in traditional tubes to emit electrons. And the electron emission is actually what is leading to the radiation and allowing us to take images of a bone. So no need for extreme heat, and subsequent cooling again means less power needed, far more durable, and far smaller and cheaper. So that's really the groundbreaking the groundbreaking value prop that Nanox is creating, because it's good to keep in mind 2/3 of the world has no access to radiology, and so the cheaper and more accessible we can make this, the better. It is a digital X-ray source, and I see a lot of people saying that's the groundbreaking thing about it. But there are so many digital X-ray sources out there. But the one thing that they all have in common is these digital cold cathode sources. Sorry, tongue twister. They all use carbon. That Nanox is using in order to generate their electron emission. And what this means is the carbon nanotubes have been known to be very kind of prone to erosion and not very long lasting. So although they're digital and although they're a little bit cheaper, they don't really solve the problem of having to replace tubes every so often. So what this means is Nanox doesn't have the only digital X-ray tube, but so far it has the only digital X-ray tube that is proven to be as durable and long-lasting, and even more durable and longer-lasting than the traditional tubes we're currently working with today. And Nanox is, so I'm going to move on to their FDA clearance approach. It's not approval, it's clearance, because you're not actually putting anything Nanox is selling into your body. So the regulatory process is a lot more simple and straightforward than it would be if you're maybe taking a pill or some cancer therapy. So they got their first clearance, their single source clearance. And essentially what this means, To me, this was the most important step because their X-ray source was clear. Their intellectual property was validated by the FDA. So now they're moving on to their multi-source clearance, which is essentially packaging a bunch of these sources that the FDA just told us were legitimate and valid and putting them into a machine. But before any of that, they have two revenue streams. One will be that machine I just mentioned, and the other one will be licensing their X-ray tube to other companies such as Fujifilm, such as SK Telecom. And the thing to keep in mind there is that first clearance Nanox just received, that opens the door for any licensing revenue that they're going to enjoy in the future. So if Fujifilm, who's now filing patents using cold cathode technology, who's the sole mammography partner for Nanox, it's up to them to get the next clearance. And I think it's a lot easier for someone to expect a company like Fujifilm to receive good FDA news than a company like Nanox, who has just gotten one good announcement, and it's still a very new idea. So that's a little bit about the FDA approach, and then their approach to scale is also should be talked about. So they're currently building 100 units for a dry run, and then after that, they're going to build 900 more for deployment. They are not going after the hospital system. The hospital system is notoriously difficult to disrupt. So they're going after urgent care clinics, private clinic chains, outpatient clinics, retail locations before they're attempting to disrupt our hospital system or any other hospital system. The other thing to keep in mind is they're taking a very open source approach. So I just mentioned Fujifilm is going to be using their cold cathode technology for their future mammography device if it's cleared, and so that open source approach to me is a hedge against really deep pocketed incumbents who could be incentivized to maybe compete against Nanox and try to emulate what they're doing. So they're not aiming to displace GE. They're not aiming to displace Fujifilm. They are aiming to sign licensing deals to let them play. Get the management team because it's starting to get long, but 4 key partners to keep in mind. So SK Telecom owns 10% of the company. They've put $25 million of their own money into Nanox. They've made Nanox related hires for chips, artificial intelligence, and cloud. And they're planning on placing 2,500 units of the multi-source machine if cleared. And they're also their partner on the new subsidiary and factory where they're going to assemble these. Fujifilm also invested. They're the mammography OEM I just talked about. Foxconn also invested. They're the main manufacturing partner. Yosmo, which is the most prominent Israeli private equity firm, owns 5% of the company. So there's a lot of big name companies and enterprises that are backing this company up. And now moving on to the math, this is where it gets kind of exciting. So this is all pending clearance, and I'm assuming $0 from their licensing, which is overly pessimistic. I just don't really know how to, I don't know how to quantify it at this point. So I think
hopefully should be connecting. I can hear you.
Let's see if we can get. Yeah, I wonder. I haven't seen people complaining about short space crash. I wonder if it's something up. But it looks like everybody's coming back in. We got a good amount of people. I think that they're all going to file back in.
Where did I cut off? Just so I know where to start back up.
Brad, real quick before you start back up, Wolf, who do you want me to invite to speak? I don't know who was on your list.
Just Avi. So all the speakers I see are up from the podcast. And thank you to everybody who already came back to this space. I don't know. Maybe I need to get an iPhone or something because it doesn't seem like there's any crashes on an iPhone, but on my phone, they always crash. It's just a matter of when, not if nowadays.
That's how Apple gets you.
But Brad, unfortunately, yeah, right. Twitter and Apple are scheming on us right now. Okay, so real quick, just so we can get people back on, it would be great if we could just share this link, just new link or something. New link. I'll share that out. Old one crashed. And I'll be sure to bring all of my complaints to Twitter on Thursday. Is Alfie joining back, Anthony? You chatting with him?
Sorry, I didn't catch that. I just retweeted the link. Sorry, what did you say?
Oh, I see Avi's in here now. Yeah. So if we
Okay,
just want
there
to
he
make
is.
Avi a speaker, yeah, Brad, unfortunately, what happens is it cuts out even a little bit earlier for me than other people. I get thrown out of the space, and then it's like, it's just the worst feeling because nobody else knows it's going to crash yet. And I have like 30 seconds where I know the space is going to crash. So I try to always like DM all my speakers, like, it's going to crash. It's going to happen. Like, I'm the guy who, like, sees the iceberg on the Titanic, knows it's coming. And so unfortunately, it cut out a little bit earlier for me. But I think if you kind of pick up towards the end, that would be good because
Numbers.
I know that we want to get through the
Yeah,
numbers, a few
sure.
more things.
So did you guys get the 4 partners and all that, and then moving on to like math? Was that where I kind of cut out?
Yeah, I think that was where it was. I was excited for you to talk
Perfect.
about their revenues.
Perfect. Yeah. So almost done actually. So according to RAN, according to the company, they're going to charge $40 per scan. Important to keep in mind, they are distributing these machines. They are not selling them. So RAN always kind of compares the business model to Xerox. They charge per scan. So all these developing countries that may not have access to radiology, beyond the fact that they cost $15,000 a machine, that's really the main driver of accessibility that I find pretty exciting. So they're going to charge $40 a scan. They're going to collect $14 of that $40 per scan in revenue. The only margin color we have right now is mostly in profit. So I'm just going to give a really pessimistic revenue scenario. I'm not going to try and guess on margins. So based on contracts and in collaborations, they have 10.65 thousand units committed. So assuming they don't sign any more contracts, which is extremely pessimistic, assuming that they realize a minimum of 7 scans per unit per day based on current contracts, which is the service contract minimum. So again, really, really pessimistic, just trying to give you a baseline view of what this company can be. So their current deals offer them $380 million in annualized revenue. So it would be a pretty quick ramp up to that number, probably by the end or middle to end of 2024. So kind of assuming that nothing else happens, even if they get to that 380 million in revenue mark, which is a big if still, despite the fact that they've gotten that first clearance. There's a lot to like here, and what's even more so to like is there's a 306-day profit payback period with these units. If we want to take RAN at his word of revenues will be mostly in profit and take that in its most pessimistic outcome of 51% gross profit, and then 153-day revenue payback period. So really, really capital efficient model. Really, really, I'm saying really too many times. A lot of value. They're creating a lot of value, and they're creating accessibility for a field that the majority of the world has been left behind in. So that's really the main pitch. Again, extremely speculative. Very much so a win big, miss small mentality on this one. And then just one more thing, actually, sorry. So they're currently in contract negotiations with India, China, the UK, and many more. After their RSNA demonstration, they said they had a flood of interest. So I'm giving you all these really negative, pessimistic scenarios, but there's a lot of reason to think they can become a lot rosier in the future. So thank you for listening to my 2-part spiel. And yeah, that's it.
Yeah, man. When that was a great encapsulation, and I appreciate you rolling with it through the one space to the next space. Just to everybody who joined back, thank you for joining back. If you were joining back because you're enjoying my spaces, make sure that you're following Gannon. Thank God we have Gannon. He's hosting. I literally got on a 2-hour Zoom call with Gannon last week. We chatted for like 2 hours. I think it was supposed to be 30 minutes. This guy is fantastic, and just passed the Series 65. So although it's not investment advice, it kind of is. No, I'm just kidding. But make sure that you're following him so you can get the ultimate content. And also thank you to everyone who's been joining the Wolfpack and following me. Been averaging a nice 1,000 followers a week. On pace for it this week to hopefully hit 5K. That'd be a great milestone. So thank you to everyone that's joined. All right, Pierce. Have you had a chance to maybe look at some of those industries data?
Yeah, can you guys hear me?
Yes, sir.
Okay, so in terms of, I think, broadly speaking, you suggested looking at a couple asset classes. So the cannabis asset class is based on kind of like traffic charts, really, really popular in late January. Since then, we've cooled off pretty significantly. And again, this is just so you guys understand, we're looking at global interest based on the traffic that we see at TradingView. We have close to 200 million page views a month. And so from a kind of net traffic standpoint, it's a pretty clear indication as to where investor interest is. So definitely it's come off a lot in terms of that asset class or that sector overall. I'll tell you, in terms of if I'm looking at you kind of our overall traffic, almost all of the dominant tickers this week are crypto. I see very few exceptions. Apple and Tesla, but they're always trending because they're Apple and Tesla. So in terms of specific tickers, I'll try to dig in a little further. Broadly speaking, obviously, huge market sell-off this week, relatively speaking, I guess, in crypto. And the reason that's such a important, I guess, sell-off in terms of, it doesn't seem like that much. It's only, a 20% of the market cap of the majors. The problem being is that a lot of futures contracts are being unwound, or basically people are being stopped out thanks to the lovely friends at exchanges who make margin calls against their counterparties. And so there's key levels where a lot of people just start to get liquidated. And so from a leverage perspective, even a small sell-off is actually quite substantial for crypto, because it compounds on itself, or sell-offs beget more sell-offs in a lot of ways. And so I think that really does kind of drive the core interest around this trading has been pretty much all crypto. The only exception, well, God, there's Doge. Doge is number 10. I'd say a lot of people are just watching the value of the dollar as well, and I think that just has a lot to do with the macro of a weaker dollar means a bullish market in general. From another macro perspective, there's a lot of interest around what is this? Yeah, it looks like Canadian dollar as well. Canadian dollar and dollar seem to be very, very dominant themes throughout the week. We have a little bit interest in gold, but broadly speaking, it's crushed by crypto. And I mean, I think that's just the nature of a younger audience looking at web traffic on TradingView in general. So yeah, I mean, those are some initial interests. I can dive into specific tickers if you guys want to. Just throw some names out, and I'll pull up kind of the stats that we have. And just as a comment for Brad, I'm curious. So I was looking at it. I was looking at the company on TradingView. So currently they have no revenue. They basically, this is all kind of potential upside revenue. It's amazing to me that a company can already be $1.5 billion market cap company and literally have no top line whatsoever. But I guess it's all potential upside. That's kind of the pitch, right?
Yeah, I think it's really good to keep in mind the $380 million revenue ramp is not super far off. And if they don't realize that, if things don't go their way, then this probably has as high of a chance as any holding in my portfolio of being worth zero in a few years. So very much so a binary outcome with this company. It's going to either be worth a lot more than it is today, or very much or very close to zero, I think. So yeah, good point.
Asymmetric for sure. So I mean, I think that go ahead. I mean, this is kind of my initial takes for sure.
Pierce, I'm going to come back to you. One ticker which would be very interesting to hear about, because I know multiple of people that started positions in it this week, would be Upstart. So UPSD would be actually very good to hear your data. While you're looking for that data, I want to just pull back to Anthony real quick. Anthony, I know that when we chatted in the beginning of the week, you wanted to talk, and I'm not sure I can keep you to 5-6 minutes, but maybe you will try, about CMLF. Can you share any thoughts with us on that?
Yeah, I'm happy to. Let me pull up my the thread that I wrote on it really quick for you guys. but what I will say like about CMLF is it's right in the space of, I think, one of my most bullish spaces overall, and that's just the genomics and tracking preventative healthcare and like those individualized healthcare decisions. That's for me like the most. I think that's one of the biggest upsides in the next decade, because I think you can put a value along a lot of things, and I think it's really hard to put the value along, if your child were to come out with certain diseases and there were things that you could do to prevent that, or if you already are suffering from certain diseases and you can get a certain base editing treatment or a double strand break treatment. And this is just like different ways that like genomics and proteomics and all these things will be impacting our life in the future. I think that getting the data from it will be the most important part, because I don't think that you're really able to just continue to advance in there's so many different, there's hundreds and trillions of cells in the body, and it's impossible for all that to be just mapped by people without using computers and artificial intelligence and data engineering. And that's pretty much the entire pitch for Sema4. So Sema4, the CEO of the company is Eric Shad. And he is, I mean, when I talk about like the top of the top in any really industry, like as far as his H index, he's one of the top 1,500 cited scientists. And he is by far, like I would call him like not just a revolutionary in this space, like I would call him a pioneer, because he used to be the chief scientific officer over at Pacific Biosciences. And so knowing that and knowing the pedigree behind Kazan Capital, one of the best investors in genomics biotechs since like 2011, 2012. And so just knowing that pedigree of the team is together, along with, the co-founder and CEO of NVTA, Sean George, on the advisory board, as well as Emily LaProuse from Twist Bioscience, which are two of my other favorite in that entire realm of genomics, proteomics, synthetic DNA. But what I have a problem with a lot of those companies in this market today is this valuation perspective, right? Like everyone's looking and saying, well, CRISPR and Twist and all these other names don't have that kind of revenue growth that you can see. It's all like projected in 2023, 2024, 2025. However, the data on those companies, what they've been doing recently is actually quite insane. Like they've been coming out with news every single day about some new base editing technique that like NTLA's just started getting into a new form of base editing that's just, it's even more advanced than the last one. So there's a lot of different names now that are becoming into that foresight of mainstream adoption for investors. But sorry, I think I must have talked about that a little too long, but I just wanted to paint the picture of the difference and why I'm so focused on Sema4 is that it's going to be, I think, embedded within all these companies. And basically what's going to happen is all the information, all the data from patients, these genomic tests, long-term longitudinal clinical data, and just everything that goes into a person's health from start to finish will be sent to their, so they have a Centrellis platform, and that's just integrating that proprietary data. Then that includes the genomic insights records, public databases. And with that, they're trying to do, extensive disease mapping, individualized health course trajectories, actionable treatment protocols for that entire health core ecosystem. So the main thing for me, just thinking about why that's so important, is because all these companies are going to be trying to solve the next disease, right? It's sickle cell or it's blood tumors, whatever it may be. And they will all want to have as much data from patients. And not only that, with that data from patients, they're able to synthesize even more information because this platform runs on artificial intelligence and data engineering. And with that, they will not just, right now, all they focus on is women's direct health testing, right? So they're testing just that kind of, that's their one main leg right now. They also do COVID testing as well, but they're planning on making 6 new legs. And within those legs, it will be all pretty much focused around this artificially intelligent platform that's going to allow them to scale into things like pharma partnerships, where they'll be literally manufacturing drugs with these pharma companies, which makes sense as why NVTA and Twist are, working with them to some capacity, because Twist produces synthetic DNA and they're one of the biggest leaders in that along with Ginkgo. But I think that Twist and Sema4 could provide really good insights that for them to use that synthetic DNA. And Twist and Sema4 and NVTA have that connection where they're both amalgamating tons of tests and data. And I know NVTA I think recently acquired an artificially intelligent component of their platform. But knowing that they were on the board, like I know everyone considers them competitors. For me, I don't really see them as like they are competitors, but it doesn't make sense to me why they would be working together to form this SPAC, this partnership, and be involved at any degree if that wasn't the case, as if they were thinking that they could work together, right? Because it's not, I don't think it's going to be a winner. I know a lot of people think it's a winner takes all market for this. And in a long, long time, maybe. But there are 8 billion people on Earth. I think, a couple companies can fit in here and get enough tests, right? Because CMLF only has 300,000 tests of genomic data, but they just did a partnership like this week with North Shore in New York, and that's another 300,000 genomic data sets. So they are really, really rolling here. They built a 70,000 square foot facility to expand their testing as well, like both testing patients as well as testing their new products and their platforms. What's really interesting here is that all these new strands of DNA, all these new strands of revenue, sorry, it's a very similar industry. All these new strands of revenue are not really counted in 2020, but they're projected for the next coming years. And you can see that they are making strong moves towards that. They just began testing babies, newborns. And so I think that they're going to be moving into everything to try to just get that overall health picture and be able to prevent and say, well, based on these thousands and millions of tests and data points that we have and running it into our platform, we're able to see that, well, this drug could work for this person's genomic type, or this person's health history would work better with this medication or this therapy. And what's also interesting is that it's not just for that one Centrellis platform. They're working on an oncology leg too. And I believe that one's going to be called Traversa. And that one will be similar to Centrellis, but that one's also going to be very much so focused on oncology. So I'm just very much looking forward in the future to seeing how many different areas of our healthcare that they can touch, right? And if they start partnering with these other manufacturers, and let's say that they create like an incredible drug that does cure one of these great diseases that's affecting so many people, and I just think the potential for that is essentially limitless. And on a valuation perspective, they did $190 million in revenue last year. They'll be doing about 265 this year projected, and 360 next year projected, and up to 504 in 2023. And I know people are skeptical of investor presentation SPAC decks with revenue, and I would say I agree, except for the pedigree of this team. Like if you doubt it, in my opinion, I think it's like it's hard to doubt this team because it's the all-stars of the sector, right? So I think if anyone's going to be capable of doing it, it's going to be the guy who has 144,000 citations that is in everyone else's papers, who also have these other genomic companies.
Absolutely. Appreciate that. Hope y'all can hear me. My Wolf account was booted from the space. I am not sure why. I think that Twitter Spaces just has an agenda against the Wolf account. However, this is my personal account. For those who are unfamiliar, my name's Scott Flaxberg, and I'm the COO at Wolf. And I run the Wolf Twitter, so feel free to follow me on this one as well. I don't post as often, but I still like to interact with the community. Pierce, have you had, I'm going to throw it back to you. So thank you, Anthony, for that. I thought you made a really strong case for them. I did enjoy your thread, and I recommend that everyone goes to Anthony's page and checks out some of the threads. Also, shout out to the Pounding the Table podcast. Amazing podcast. If you're looking to try to find new stocks, understand them better, hopefully I'll get on the podcast sometime. Now that they've been on the space, but 100%. I really would advise everyone to go check out both Avi and Anthony. They're the two hosts, and they do a lot of really important work for our community. Yeah, cool. So Pierce, throwing it back to you for some data on Upstart, because I think we'd all love to hear about that. And then we'll probably wrap up in about 10, 20 minutes. So we'll go to Gannon afterwards, because I know he hasn't had a ton of a chance to speak. So Pierce, go for it.
So I looked into the company a little bit just to understand kind of the macro of where they, what's kind of the catalyst, why they've been around. Obviously, I'm sure you guys have talked about this before. Single-handedly, the largest day from kind of a net interest standpoint on TradingView is March 18th. So I assume that was their earnings day. But since then, we generally speaking, I mean, I'm looking at about 25,000 people who are like actively following the company on TradingView, which is not a bad size. I think it's for sure on the smaller end, but maybe that's just the fact that they are a brand new company. I mean, they're straight out the gate. I mean, in terms of a technical setup, specifically from kind of like a trading perspective, I mean, building a strong base around $100 a share. I mean, there's obviously like a psychological element to that as well. I mean, it's a company I don't know basically anything about, but broadly speaking, at a $7 billion market cap, I mean, I guess they do about what 350 million rev annually. So I mean, from kind of a high performance software company, that's not unreasonable at all. But yeah, I mean, definitely March 18th, they crushed it. I think since then we've seen it kind of taper off. This month, the highest kind of traffic interest day was April 7th. I don't know if you guys talked about it that day, but since then we've seen kind of modest engagement, nothing really spiky. So broadly speaking, I think people are probably looking for another catalyst. Companies like this, I mean, small enough that a single news story actually moves markets pretty significantly, versus some of the mid cap, large cap companies. So safe to say, small company has only had one earnings since going public. Next dated earnings, I'm looking at it, it's March 11th. So we have a couple weeks out. Obviously, I'm sure you guys will talk about it before then. But yeah, I mean, that's kind of what we got right now in terms of not a lot of data to go on. But yeah, I mean, obviously a ton of interest when the company initially came out, and probably some of that initial news that led up into earnings. But yeah, I mean, huge spike back in March 18th. I can't tell you exactly what that was, but you guys probably know better than I do.
Well, before I go to again, and I'll throw it to Brad. Brad, you started a position in Upstart this week as well as I did. Up to 107.38 right now. I felt really comfortable starting that position, just with the model of what Upstart is doing, the amount of due diligence I've done. Can you give me kind of like a little 3-minute of just what kind of pushed you over the edge?
Yeah, interrupt me please after 3 minutes because I have a hard time speaking briefly. But
you know what they let people do now?
White label.
Oh, sorry. I was just going to say what they even let people do now. It's actually a new feature. I saw it when I was the host. Apparently, this is a new thing. The host can now mute speakers. So when I'm hosting, I'll have to do an air horn and then just mute people. So, but I'm not the host, so you're not getting muted by me. So the floor's all yours.
It reminds me of our presidential debates last year. Not to get political, but so Upstart is a private label loan service that offers you loans through its own website that then redirects you to its banking partners, or builds loan products for banking partners like TCF and Apple Bank to improve their own loan process. So the value creation here from a banking standpoint is that, according to the Consumer Financial Protection Bureau, not according to Upstart, banks get a 2.7 times higher approval rate with maintained loss rates on their loans. So they get a larger and they get a larger loan book essentially without sacrificing any quality. And 71% of their loans are fully automated, reducing cost. From a user perspective, users get a 16% lower mean APR, 0 prepayment penalties, and cash received 1 business day after the loan's approved 99% of the time. So they're really leaning into this. We're going to help somewhat legacy antiquated process become more mainstream, and they're using a ton of buzzwords like cloud computing and AI and machine learning and data flywheels and all of these wonderful things we like to hear, that to me personally make a lot of sense, but I think people need to read the S1 and decide for themselves if it makes sense. So that's the 3-minute pitch. Hopefully that was 3 minutes.
Yeah, that was great. And the stock also had just formed. I think if you're looking at it from a bit of a technical analysis standpoint, more of Pierce's area than of mine, because I don't do a ton of technical analysis, but I have been working on it with a friend. You could see that they had risen up. I think obviously everyone remembers they did that shoot up from $58 in 3 days all the way up to $164 a share, and then they had really fallen back down from there. I mean, because they had been up 724% from opening, and then they were back down to 91, and I think that's where I got in, was right around 91, 92. Obviously, this could fall more, right? It had a huge rise. But to me, if you look back to February 12th, they hit $100 a share before going down on that path all the way down to 54 and then shooting back up to 160. So to me, I was looking at that $100 a share point. I was just waiting for it to come back to that level because I seen it peak at that level before, and that's where I wanted from entry point. So a bit of nonsensical technical analysis from someone who doesn't do technical analysis. with that being said, Gannon, we'll have to throw it back to you. Actually, I know you just posted about this, but ARBKF, in which I have a position in, kind of because of you. So I would love to hear some of your thoughts on the stock.
Yeah. So Argo Blockchain is ARBKF. It trades on the LSE, London Stock Exchange. Before anyone gets interested, just know that you got to check in with your brokerage how much that's going to cost to make a trade. I trade on TD Ameritrade. It's about $15 per trade. Some are like upwards of 50. So just know that going in. So when it comes to, I wrote several memos and write-ups on Argo, and I really like the movement today. I believe we're only down, 1%. I gotta check, but no significant downturn in the stock price. Even though Bitcoin, took a tumble these past couple of days. Of course, Argo has been down pretty significantly. I believe its 52-week high was in the 4s. This stock, it's very simple. It's it's not too complicated. They're a Bitcoin mining company based in Canada. They are opening a huge plant in Texas because of the Texas power costs are very favorable for Bitcoin miners. The CEO is Peter G. Wall. I honestly usher if anyone's interested in Argo to follow him. He's a great follow. Reddit really is. I used to make fun of Reddit a lot, and just because of kind of the whole Wall Street bets thing, but the Argo Blockchain subreddit has some incredible DD. Again, with this company, it's really just comes down to hash rate, and they have some very favorable things in their direction, especially in comparison to other Bitcoin miners like Mara and Riot. Really, the only thing that I see holding Argo's price back is just not being listed on the NASDAQ. And there have made many, I guess I want to say hints at wanting to be listed on the NASDAQ. That's definitely something that Peter wants to do. And so just kind of be on the lookout for that. You can look on Reddit and other, I believe Seeking Alpha has a couple articles that came out about it that I personally think it's massively undervalued. It's definitely undervalued in its hash rate compared to Mara and Riot. And it's just really this NASDAQ listing that hopefully is coming. They are very secretive about that. They can't let that information out, of course. But when you do the numbers, when you crunch the numbers, they're still extremely profitable at Bitcoin at 50K. And I bought Bitcoin this morning at 50K around there. So that's it. Hopefully that was, a good piece on Argo.
Yeah, appreciate that.
If you can hear
All
me.
right, so yeah. No, I heard the whole thing. Which I like. I like hearing more about companies for sure. Okay, so Avi, I'm going to go to you next after Brad real quick, and I feel bad, Avi. I did not.
Yeah, I was just actually no. I was actually about to tell you I got to pop off here at 6. So I wanted to thank you. I would have loved this talk. I do have a call here at 6 that I have to jump on, but really wanted to thank you.
All right, you're coming back on. You're coming back on another. You're coming back on another space.
Oh yeah, man! I got to pound the table more.
Gav, can I say one thing? So we've had several speakers not be speakers anymore. I'm trying to add them back. It's Spaces that's kicking them off. I'm not doing anything here. So I just want to know, Pierce and Anthony, I got no vendetta against you guys if you got kicked out of being speaker. It's Twitter Spaces, guys. It's it's in the process of being better. So sorry about that. Okay, he's on.
Yeah,
he's back on.
Avi,
Yes, I don't
thank
know
you.
why
Okay.
they denied me.
I'm not sure if it just removed Avi or not, but Avi, yeah, thank you so much for coming on. There's never enough time on these things, but we love having people on, and I'm definitely going to have my speakers on again. So make sure that you're following the Wolf account. I pinned, by the way, to anyone that's interested. I think you can all still see it, a tweet from the Wolf account. What I did on the Wolf account was I made a public Google Calendar where I put my spaces so that you can easily see when there's going to be spaces. If you join the calendar, it doesn't share your info with anyone. I have no idea how many people are on the calendar. I think a lot because it got a lot of impressions. It doesn't share with me your info or your email or anything. You can just join it and then you'll just see. And I'm only putting on like 3 to 4 spaces a week on there. It's just a little notification on your calendar or whatever. I don't even think I have it set to give notifications. So honestly, just very hassle-free way to know there's going to be spaces. And we're going to have that go on the Pounding the Table, guys. So I don't see them in here now. I think they had an opt-out call. But Brad, I know that you had one last thing you wanted to chat about.
Yeah, just to give a little color on what happened in March with Upstart. So it's good to know that this is a COVID reopening beneficiary. So this company relies on economic activity, relies on loan volume as it's collecting commissions per loan. So essentially, as economic activity recovers, this company is going to recover. And you saw that in their guide. I mean, they grew revenues at 42% in 2020, which, I mean, they have about a 51% contribution margin. Their GAAP net income positive and about a 14 times sales multiple. So that's, I mean, fine. But next year, they guided to 115% growth to surpass 500 million, which beat even the most rosy, optimistic forecasts and guidance that were offered, just kind of showcasing that they will rise as the world normalizes, which you don't often associate with companies that are creating value with artificial intelligence and machine learning and automation. So good to keep that in mind.
Yeah, absolutely. That was a nice little piece there. Gannon, I see. Did you make Caleb a speaker?
Dude, I don't know what's going on with Twitter Spaces right now. I'm just trying to add. I don't know. I think I did add Caleb. Yeah.
Hey, Gannon
Cool.
and Gav, just talk for just like 10 seconds.
Yeah, sure,
No,
go
you
for
can't
it.
talk for 10 seconds, but you can talk for 2 to 3 minutes. You can talk for like a couple minutes because I'd like to hear from you a little bit more than 10 seconds if that's okay.
Sure. So I just wanted to really touch quick on Upstart. I have shared a little bit of information on that one, but I do want anybody interested, go on your computer and pull up the S1. Just Google Upstart S1. Make sure you read pages 2, 3, and 4. I do have a small position in it. Their revenue is it's tied to a very select number of banks right now, a high concentration. So make sure you just read those first couple pages. I definitely like the outlook for it. Their AI model is absolutely genius. But I think if you do any research at all, just read pages 2, 3, and 4, and that'll give you a really good base of what to start on. There's been some great threads on it as well. And I would be led to imagine that not a lot of people go to the S1s. It's a great place. It's not as difficult or as technical as one might think, but just definitely check that out. And that's really all that I wanted to say on Upstart.
Cool. Maybe you could give us also like 2 to 3 minutes. We're just going to run for about another 5 to 10, unless, Gannon has to get off sooner. Just to cover a little bit more about what people talked about this week. I would love to give all the speakers just an opportunity to kind of close out. So Caleb, maybe you could speak to did you add any new positions this week? Did you buy or sell anything? I know that you actually closed out your skills position. So maybe you could just give us a little bit of color to your week.
Sure. Yeah, absolutely. So I was getting a little bit beat up on skills, Tiger, Mohawk. Those were all small positions, and I closed all 3 of those. I think it was Tuesday and Fetch. I still believe in all the long-term thesis on those companies.
Dude,
but I literally
like
sold
15% today.
Yeah, I literally sold them all at like the low this week. They're smaller positions, but yeah, I mean that hurt a little bit. But I put most of that money back into Cloudflare and Net, and I put the money back into most of my bigger holdings: Roku, CrowdStrike, some Peloton, SE, Etsy. My core 5 or 6 that are my biggest positions. So yeah, Futu had that shelf offering that I should have known a little bit more about, and Tiger slid in the back of that, and that thing's just been trading between 16 and 20 for a while now, and I was afraid that it was just going to just drop because it's such big moves. But I spoke the other weekend about just holding on and long-term mindset, but I just didn't have the conviction in any of those that I have in these others. So you know what? If I miss 20, 50, 100% on these ones, when I think firmly that Cloudflare, CrowdStrike, Peloton, baggers from here, so I don't really care too much about 25 or 50%. Who knows what will happen with them, but I need to stick with more of my conviction holdings, the ones that I do most of my research on. And then in our other account, we added a little bit to HubSpot. I've been following that one a lot. I really like that company. No one talks about it. It's a steady grower. I think that people should maybe put a little time into checking out HubSpot. GoodRx, we added a little bit to that one. Just a lot of dollar cost averaging. I kind of feel like that tax news the other night, that just was something that we all knew about. And Parrot had a Twitter space there, I think it was yesterday on that. And I hope that none of the individual investors like us were selling because, that's already baked in. So that was just algos reacting. I feel bad if people were closing out good positions, whatever. I ended up buying after it. So more or less, I'm sticking with my core holdings. I've decided I'm going to do much less intraday tweeting about my trades and stuff like that. I've grown a little bit uncomfortable with some of the stuff that I've been seeing. That's kind of where I was at this week. I really liked the close today. I thought it was very, very good that we have much of these big indexes going higher, all-time highs together. I do track quite a bit of those different. It's under my bonds, key charts, and volatility that I track. So I like those a lot. One other person no one ever talks about is Knox Ridley does really good charting. He works with Beth Tindig, so you can follow them both on Twitter, and they do share quite a bit of free information that is very, very excellent. I'd say that Knox is probably one of the best I've found for technical analysis, and there's like an 8-minute video on the IO fund that talks about where the NASDAQ is at and which index he uses. And so it's kind of nice when you see a lot of the big leading research people kind of saying the same thing. It makes me feel good about my holdings going into earnings the next week or two here. I'm really looking forward to seeing what Pinterest has. This morning I shared a link. Magnite, one of my companies, they had a little news blast about a survey they did in Central and Latin America, and it's very bullish. And I think that people should check that out because we're hearing a lot of good news from that area. And we just saw 2 weekends ago Pinterest increasing advertising dollars in Latin America. We all know about Mercado Libre, the payment company Stone. No one ever talks about that anymore. STNE, that's been breaking out. One of my buddies has been texting me nonstop about that. That's where I'm at. If anybody has any specific questions, I can try to answer them, but that's where I'm at.
I think that was a really nice. So Ken actually does. We got to wrap this up. So I just want to thank everybody. Also, I only take my speakers, but really to the listeners, like it is such a pleasure having you all on here. To the ones that I know personally, Parrot, Dylan, Max, Lamonte, Tim, Josh, Plant, like been on Zoom calls with Nat. Thank you for being in here, Costas. Huge shout out as always to Josh Meltzer at Josh_MELTZR_. Josh Meltzer records these Twitter spaces. He sacrifices all space on his phone, all the gigabytes so that he can record these and I can put them onto the Wolf YouTube. So shout out to him and to the speakers. So Gannon, Flores, let's wrap it up. Thank you for being an awesome host.
Yeah, of course. I mean, guys, you see the link at the top. It says Wolf Financial. If you enjoyed this space, which, I mean, we've done, I don't know how many spaces with Wolf and Gav, follow the page, and we're just going to keep doing these. We're going to keep having market discussions. And, even if it's 5 minutes about a stock, that's not maybe enough to, of course, to make a position, but that sparks an interest. Every single time I'm in these spaces, I learn something new. I learn, about an industry or a stock. And last thing I'll finish with, be safe this weekend, have fun this weekend. I got a beer in my hand. I'm ready to go. I hope you guys are too. So see you guys. Hit that follow for Wolf Financial or Gav. Later. Peace.